Is the market overvalued? So, this is a question I hear a lot. And I don't actually believe it's the right question, but I do think it's a question people are asking themselves and asking others like, it's so overvalued. What's the right value? We're at values that the market has never seen. We're at 1929 values, or we're at 1987 values, or we're at 2000 values, or 2008 values. And I think, is the market overvalued actually not that strong of a question? And I want to answer the question, and I want to tell you why it's not a good question. So the first is, what is the right value of the market? And you might say, well, we can look at history, right? We can look at history and go, well, history in the 80s or the 90s, the aughts, or the teens, it was this. The problem is that those values didn't happen in a vacuum, right? You have to look at all the other choices people had in the 80s, 90s, aughts, and teens. Today, what we have is a bond market that doesn't yield anything, right? If you look at what the 10-year treasury yields today compared to the teens or the aughts or the 90s or the 80s, it is a completely different market. You have to invest in the market that you have. And that's why the question, like, is the market overvalued? In regards to what? In relationship to what? Relative to what? Relative to a zero interest rate policy? Relative to, in Japan, the 10-year treasury is maybe at an amazing day, right? 20 basis points. That's less than 1/3%. In Germany, it's negative. In the US, it's just a little bit above 0.5%. So this, is the market overvalued, is not the right question. I believe the real question is what's going on today, and value is such a subjective question. What's not a subjective question is money still flowing into the stock market more than the bond market? Is the stock market still increasing in price stronger than the bond market is increasing in price? Is the stock market still going higher? Now, as soon as you ask those questions, you have to actually look at a price chart. And it will look very different, right? Because you have to go with what price is actually doing. When you compare the stock market with the bond market, you have to compare those two, right? Because valuations are different each decade. We don't have 8% on a 10-year treasury. We don't have that. We may have it one day in the distant future, but we don't have it today. So asking, is the market overvalued, is almost also asking, like, is the market overbought? Overbought according to what? There are 700 million investors. Just let's say about 10% of the world population invests in the stock market around the world. And just generally speaking, the stock market's about a $60 trillion stock market. Okay, so the question has to be around those 700 million people. What are they going to invest in? What do they have choices in? They can invest in bonds, they can invest in cash, they can invest in stocks, they can invest in commodities, and they can invest in real estate. Now, they don't have to invest in just one or the other, right? So the question, is the market overvalued, is the wrong question, because when you ask that, it's like fighting a past war. It's like being in World War II and asking questions about World War I, or being in the Korean War, and the Korean War wasn't World War II. It's a different war. The Vietnam War was a different war than Korea. You guys following me with this whole war metaphor? You invest in the market we're in. This market is not referencing valuation the way the market was valuing valuation in the 80s. It is a different market. What is the right valuation when the Fed expands their balance sheet $3 or $4 trillion in days, not months or quarters or years or decades, but days? What's the right valuation, right? What's the right valuation when Germany's 10-year treasury is negative? Guys, I'm going through this again. I know I am, but I want you to hear this, that one has better performance if they fight the war they're in, if they buy the market that we're in. I'm not saying I like the Fed expanding their balance sheet, okay? What I'm saying is that's what's happening now. I'm not saying the 10-year treasury should be at 60 basis points or a 0.5% in the United States, right? That's the market we're in. The better question is the stock market, or how do we know if the stock market's going to continue going higher? That is a much stronger question than is the market overvalued, because that is such a subjective. And then you have to go with the current market, which means you have to go with everything after 2008. So the takeaway is not to diminish or shame someone that asks, is the market overvalued? Because they've been trained. You have to think about this. They've been trained to ask that question. It's the wrong question. It's a question maybe you wanted to ask yourself in the 80s or the 90s, but certainly not in the 2020s. Certainly not, because I don't think valuation, if you think historically, it's not going to matter. You have to do valuation today with central banks. It's not just the Fed. Central banks expanding their balance sheets. Governments deficit spending, right? Paying people money because unemployment has gone up. What does that look like? That's never happened before at this scale. And so the better question, or the stronger question to help your performance, is to say, okay, is price going to continue going up? And if so, what do I need to look at? Now that's outside the spectrum of this question, this Ask RC question, but I want you to know that is the market overvalued? And I don't want it to diminish again, but it's not the strongest question. And the thing is, we don't know because it's so subjective. I hope this helps. If you need more clarity around it, and I still want you asking, so please ask the questions in the comments. You can always email me at rc@fearlesswealth.com for more questions. Thanks so much, guys, and I look forward to seeing you on the next video. Okay, bye.